If you've been losing money over and over again in your trading, you have been doing it all wrong. In this video, I'm going to give you a step-by-step process on how to make $100 to $200 per trade, risking the smallest amount of money while being rewarded the highest return as possible. Welcome back to the channel, everybody. My name is Don Pips, and on this channel, I help day traders win and become more profitable using the most efficient day trading strategies. Gets asked a lot is, what pair should I be trading and when should I trade it? And that's one of the key things that I want to dive into first, and that is the relative strength of a foreign currency. Now, before you pick and choose which pair you're going to trade on which specific session or day, you want to know the overall strength and weakness of a given pair. So that means if I'm trading the wildly popular GJ or GBP JPY, I am essentially trading the British pound versus the Japanese yen. So what I need to know and what I need to come to realization is, of these two, which one is stronger and which one is weaker? I'm going to be trading GJ. I need to go into the current futures contracts and look at both the British pound and the Japanese yen. And so I want to size them up side by side and look at overall strength versus weakness. Now, I'm coming in on the intraday chart, and all I'm looking for is institutional order flow from a 4-hour perspective. So I come in and I'm looking at the British pound, and I can clearly see we are weak and we are bearish right now on the British pound. And then on the Japanese yen futures contracts, I can clearly see that we are relatively bullish or stronger. And so in this instance, we can clearly come to the conclusion that we will be short on the British pound, Japanese yen. So going into it now, I can look at market sentiment and other things before I look for my go-to setup. So let's get into that. All right, so now that we have the relative strength of GJ, we want to come in and look at the market sentiment and what medium to high impact news would affect the volatility of this particular pair and help us decide the time and session we will trade. So November 4th, on Thursday, we can see we had high impact news on the British pound. We had the monetary policy report by the Bank of England and the official bank rate, okay? And so, granted, this is in hindsight, but on a day of trading, you want to come in, and what you want to do is you want to click beside each little folder to give you a brief synopsis on what you should be looking for on that particular day to help align the fundamentals with your technical analysis. Okay, so you want to just read through, see what's related, any related stories here. You just kind of want to see what effect does it have. So, for instance, the asset purchase facility, if the actual is less than the forecast, it is good for the currency, and vice versa. Okay, so you're gonna look through each one of these, and the monetary policy report is something that you can look through just to get a good idea of what's happening on that particular currency. And so it's really, like I said, it's all to help really, gauge and confirm what you're seeing on the technical side. So you're looking at that high impact news. It helps you anticipate an explosive move. So seeing that we have a weak British pound and a strong Japanese yen, we're going to anticipate weakness in a bearish move. So it's just confirming what we already see on the charts. So let's get back on the charts. Let's get back into GJ and let's look to see for a setup. So Let's go here. All right, so knowing what we know so far, knowing that we have a weak British pound, we're going to be looking for the shorting opportunity. Now, granted, this move has already happened, but I'm going to show you how you can look back in time. So moving forward, you can see this in real time. Now, shameless plug, if you want to see how we trade live in the markets, check out the live streams weekly, Monday through Friday. But let's go in and let's start. Okay, so we're on a 4-hour chart. Okay, so first things first is I'm looking for order blocks, aka supply and demand. All right, so I'm looking for an order block to happen. So we see here that an order block was created on November 1st, right? It had the last up move before the downside. So we had a bearish order block. Now on November 3rd, we see that we come back in between November 3rd and November 4th, we come back into this order block, and we actually on November 4th, we start to shoot down prior to the news. And remember, the news was to be released at 7 a.m. on November 4th. Okay, so now we're on the 4-hour chart, but I'm just showing you how to recognize the order block on these intraday charts, and then what you're going to do is go into the 1 hour. Okay, and what you want to do is get that pullback confirmation. So what you can see is on this, we can see that we're moving. We have bearish momentum, right? We have a low printed, then we have a lower high printed. Okay, this doesn't quite make a lower low, but it still is not breaking these previous highs. Okay, so we're still printing lower highs. All right, and so as you can see, price comes down, price comes back up. So we have bearish market structure altogether. All right, and so now that we've identified that 4-hour order block on this hourly time frame, we just want to come in and refine what we're seeing. All right, so we're going to take and we're looking for these swing points. So we see a swing high here that was printed, and then this swing low. So using our fib tool, we're just going to measure from swing high to swing low. All right, we're going to measure from swing high to swing low, and then this is going to be our trading session, right? We're trading within, that London/New York overlap on November 4th. So as you can see, price comes back in above equilibrium, above that 50% level, and we're now priced at a premium. So being priced at a premium, we got that pullback, and we come hit this 62 level almost precisely, or as precise as we can get. So this adds extra confluence or extra confirmation, however you want to call it. We're going to come in, we're going to delete the fibs, all right, and then we're going to refine our order block, and we're just going to look at how high we can come up. Okay, so now we see this order block. We come in here, so we're not going to enter as soon as price enters the zone. This is kind of like knowing that it's at the 62 level. You can enter in multitude of different ways. Like you can enter right here, and let's see. Let's get you. You can enter as soon as price hits that order block, and you can put your stop loss. You can put a protected stop loss, a little bit above that high of the order block for about 32 pips, and get you, if we're gonna be targeting these levels here. So we'll be targeting like sell side liquidity. All right. So this could be TP1. This could be TP2. So now, granted, in order to make $100 to $200 per trade, you just have to do some simple math. All right, it's really simple. We have two TPs here. We have a take profit 1 of around 50 pips, and we have a TP2 a little bit over 100 pips. But for talking purposes and to keep it very simple, we'll say TP1 is 50 and TP2 is 100 pips. Okay, so if you know that you want to make around $100 for TP1, $100 divided by 50, so you have 100 divided by 50, right? 50 pips. That will equal a $2 per pip, right? So $2 per pip. So that would be equivalent to a 0.20 lot size. All right. So so now if you are going to do TP2, which would be $200 divided by 100 pips, because 100 pips is TP2, right? It would still be $2 per pip. All you're doing is just doubling it, right? Right? So this equals $200, and this equals $100 TP1. All right. Oh, that was TP2 actually. You get the point. All right. So let's just look at this risk to reward. So your TP2 is a 1 to 3. Your TP1 is a 1 to 1.6, right? And now granted, like once you hit TP1, you can actually bring your stop loss to break even and increase, and you're still going for this TP2, right? You leave a runner. Look how you increase your risk to reward ratio. You increase it to damn near a 1 to 50, a 1 to 48 risk to reward. So your first TP is a nearly 1 to 2, which you can definitely get. I put a protective stop loss, a little high, but for the most part, this is exactly how you can go from losing after losing after losing after losing, and just breaking it down and doing the math very simply and being patient, following the rules step by step, following the process that I laid out, being patient in taking these setups according to specific sessions and times. So hopefully this made sense. And if you guys like the video, please share, comment below, let me know how it's working out for you.